So tonight we're gonna have Melissa. You guys might know her, but I met Melissa a little while back when I need some insurance information, and I think Mickey actually introduced me to Melissa.
She did.
She knows what she's talking about. So I use other insurance agents; they're all nice and all great. But when I need something specific, I just turn to Melissa, and she helped me with my short-term rentals. She helped me with my flips or vacant properties or just regular insurance, auto, whatever. And I always can text her or just send her an email. And last couple of weeks ago, we closed on a property, and we like a last minute thing. And she was on vacation, and she was praying to the Wi-Fi gods.
I was, because we were in the middle of nowhere.
Well.
Yeah.
And it's closed on time, no issue. Like everything went really well. So thank you.
Thank you. Yeah, thank you. Well, hi, everybody. I think I met just about everyone, but my name is Melissa Geeslin. I own Goosehead Insurance. We can insure properties in every single state. And basically, our office is based here in Salisbury, and I personally serve PA, Delaware, Virginia, and Maryland, which I'm thinking most of the people in this room probably own a property somewhere there. But we do work with investors that own properties in Jersey and Colorado and everything. So thank you, Alex, for having me here. Thank you, Mickey, for introducing me to Alex and so many people. It's been a great relationship. And I think of insurance kind of like a puzzle. I think I was saying that to somebody earlier. And insurance is a really personal conversation for each and every person, for each and every business. So I'm not going to get totally into the weeds because not every situation is going to apply to your situation. The number one thing you want to make sure you have is you have an insurance advisor or advocate that you can send the property address and say, what can we do with this from an insurance standpoint? You have to have insurance, especially if you're seeking capital. And those rules have really changed a lot, whether you're working with Fund That Flip, a traditional mortgage company or whatever. So we have a lot of experience with that. But totally open forum. If you have a question, please raise your hand. But I did want to touch on a few things. Did anyone happen to watch the intro video that Alex did and posted to the REI group? Okay. Figured most of you did. I can kind of see who comments on it and everything. So if you haven't watched that, go to the REI Facebook group. You can scroll back through. We did a video. I think you actually sent that out in an email if you're on the email list, which if you're not, please sign up for that. That's going to give a little bit more detail in some of the topics. But the main thing is you want to be sure you have an insurance advisor that if you own multiple properties that you're actually meeting with on a regular basis. I end up meeting with most of my clients because they buy things just about every month, every couple weeks. But when you think about insurance, really the intention of it is to insure the property in case the worst happens. Mortgagees or lenders have different requirements that you may need to meet. But a couple key things I want everybody to walk away with, because insurance has changed a lot in the past 6 months. One of the things is the very first defining factor is who owns the property. So if it's in the name of an individual, or if it's the name of an LLC or an S Corp, that really changes your landscape on the options that you have. The next is basically location and condition. So even though you may be buying a property or you're not planning on flipping it, the insurability may be difficult if there's certain systems that haven't been updated. Roofing, exterior, it has to look good. And then HVAC, plumbing, electrical. If those haven't been updated in the past 10 to 15 years, the premium is probably going to be about 50% more on those properties. And so definitely, like I said, who owns it? Where is it? What condition it's in? When you talk to your insurance agent about a new property or existing properties, and they're local, they may choose to go out and actually tour the property with you. I was just out doing that with Lynn here a couple weeks ago out in Princess Anne. We went and we walked all of her father's previous properties and some of her rentals, and we figured out a plan. We decided just to keep them where they are until we do some updates. But condition is becoming more and more of a factor because insurers are super smart. We may not like them some days, but they're getting smarter with digital technologies. They're no longer just using Google Earth. They have really advanced AI and different technologies that allow them to assess your property at a distance. And almost every single insurer is going to send an inspector out to look at your properties, not just at whenever you set the policy up, but most of the time before you're up for renewal. Especially if you own properties in what's considered a coastal market, even though you may not be anywhere near water, they're going to do a lot more inspections, evaluations, and a lot of insurers are actually choosing to pull out of certain markets. We just had Scottsdale Insurance is a company that does a lot of business in insuring mobile homes. Doesn't matter what the acreage is. They recently completely pulled out of Maryland. They sent all of their clients a cancellation notice. And basically at that point, you have to go find a different solution. So insurers are changing the rules. They're able to do that and not renew you. So it is about always being mindful about the condition of the properties in. And I get it. We used to be investors. Cash flow is king. So you're trying to improve the property to be profitable while at the same time trying to insure it so it doesn't drain your cash flow as well. It is a puzzle. It is a challenge some days. So if you're looking at like just a traditional single family home, insuring that, you have a ton of options. If it's more, you're doing more of an Airbnb short-term rental aspect, your options get a little bit less. And then if you have a property that has multiple units with commercial occupancy, that can be even more of a challenge. So it's really just about meeting with your agent. Address. We are going to need the address, by the way. Super important, not just the zip code and cross streets. Addresses are important. Who's going to own it? And then a lot of the times we can do all the research before we place you with a company, because the last thing you want to have happen is get a cancellation 30 days in. As far as properties that you're planning to do renovations on, there's actually a lot of cool products out there that lenders are acknowledging, because a builder's risk or a renovation policy or one that's needed for a fix and flip, whether you're flipping it to sell or whether you're flipping it to rent, there's a lot of great programs out there now that while the policy may be sometimes 200% more than a standard landlord policy, you can agree to a 12-month policy, but they'll allow you to pay on monthly terms. So if your project's planning to be 30 days, 60 days, 90 days, 9 months, you agree to the policy, you pay monthly, you cancel, and then you get whatever you don't use, you can get that back. So there's a lot of great companies out there. A few of them to keep an eye out for is Zurich, very strong. Underneath them, you have like US Assure and Mount Vernon. And then there's also another company called Reinsure Pro, who we place a lot of business with. They do not inspect your properties, which is really nice. They can be a little bit more pricey, but you have to think about the property that you have and what an inspection would bring in order to reinsure it, right? Because that's what happens. You insure a property, the inspector comes out, they don't like the roof, they don't like the siding, there's bricks missing from the front stairway, and in order to keep that policy, you have to fix all of those things within 30 days, or you have to find a different insurer. The challenge is insurers communicate with each other. So if you get a cancellation notice and you don't solve that goes into your insurance score as a property, and other companies can start to now see that. It used to be it wasn't visible, but as long as we satisfy it within 30 days, we're good. If it takes longer than that, all the insurance companies know that, and then we have to declare you've been canceled, and then it's really tricky to get insurance.
That could be a tight window right there.
It's a very tight window, especially if they come back. We had a property a couple weeks ago. It was privately held, primary residence for the client, and the insurance company came back and said, "We don't like these 3 shingles on your roof. Please repair them." Well, she did. She finally got it. She did an amazing job. She got this notice. 5 days later, she had everything on the list checked off. We submitted the photos. I talked to the underwriter. All good to go. 3 days later, they said, "No, we're still not going to continue your policy. We'd prefer that you had the roof replaced." Well, $1,500 repair compared to a $17,000 roof. Now, we found her another company, and she's going to be fine there. But that's where your agent should get super involved in those notices, because a lot of the times we can figure out what the best path is going to be and what your intentions are. Some people do have to replace their roofs, but usually on an investment property, if the roof looks good and it's functional and it's not leaking, we need to find a different option because that's a huge expense to go through. Unless you own a construction company that might be able to help, make the cost a little bit less. So a lot of companies will ask, do you employ a property management company? Yes or no? If the answer is yes, they want to see that agreement to save that discount. If you answer yes to that. If you answer no to that, then sometimes they want to know that personal investor that's managing their properties. They want to know how many properties you have, how many years you've done this. Are you doing all of the adequate screenings? Are you complying with Fair Housing Acts? And then they want to see a copy of the executed lease agreement, because historically, what they have found is people who manage their own rentals are very loose in background checks, lease agreements, because some people are really great at it, but that's what the property management company comes in. So that's why they give you a discount. They also want to be sure you have a lease agreement, because a lot of people will write landlord policies and the house is vacant and for sale. They've gotten smart on that. Insurance companies have access to the MLS. They can look up and see if it's, does it look occupied? No, there's 6 feet of weeds and there's a fence around it. Those policies cost more than the traditional ones. So with a lot of the companies like Safeco and Liberty Mutual and Nationwide and Travelers, Progressive, Universal, those are some of the best companies to have your landlord properties insured through if they're in good condition. They're going to be the ones coming back and saying, who's managing this? How is it being managed? But now they want the piece of paper. So something to think about. But there's a lot of other discounts as far as if you do background checks, if you require your renters to have renter's insurance. So it's just making sure, does the policy look semi-expensive? Yes. You're going to see probably some of the highest insurance rates on your personal stuff, on your autos, on your rentals, on your businesses, across the board, right? You're going to see probably higher premiums than you ever had this year because insurance companies gave a lot of concessions during COVID. Their investment performance in the market hasn't been great. Maybe some of ours hasn't been great. So they have to make up for their losses somewhere, because if they don't make up for certain losses that they experience in their investments, plus with the rate of claims going on, the federal government and the states are now starting to step in and demand that they do something. There's 2 options. They can either quit selling new business, quit selling certain types of business, or they can raise rates. And in the grand scheme of insurance, it is about growth. So I'm sure you understand, they're not going to insure some things or they're going to raise rates. So you're going to see some of those things really start to impact it. So getting into the details of discounts, how you're managing your properties is paramount. So you may get a few more questions from your agent when you go to buy a property now and you're like, what is all of this about? Well, insurance has changed a lot. So if you own multiple properties, there are some really cool programs. Mickey actually referred me a client that ended up, how many units was that? 32 units. I just talked to him yesterday. I got to tell you a story. 32 units. And we could have scheduled all of those on the same policy. If they're owned by the same entity, you can schedule them all on the same policy. I know some of you have Brethren Mutual. It's another, I don't personally work with them, but Brethren Mutual is another one that will schedule multiple policies on one policy so that you're not doubling up on coverage, like liability coverages and different things. So definitely if you own multiple properties and you have 8 different policies, depending on the situation, you may be able to consolidate that. Doesn't mean it's cheaper. We've learned that, but it can definitely make it more convenient if you're trying to manage that. So usually if somebody comes to me or sends me a spreadsheet with properties, or somebody comes to me and they have a spreadsheet of properties, the first thing we try to do is consolidate into one policy. But if you only have 1 or you have 5, but they all have different things going on like they always do, you can still have 5 separate policies and it may be more affordable than combining them all. It's just really doing your portfolio review and figuring that out.
You said earlier, like the guy with the 32 properties, if they're all owned by the same entity, they can be on the same policy.
Yes.
I get it, the policy holder.
Yeah.
And if they're different, it would be different policies. But maybe one's better versus the other, because a lot of people might want to use one entity for this property that, you know, they're gonna change the entities because they don't want everything all in one
So
basket.
this one particularly did too. So the 32 properties, he actually has 5 LLCs that are combined with all of these 32
Yep.
properties.
So there's an umbrella company and the LLCs are here, but the umbrella is the one that holds the policy.
The umbrella company is the managing entity, and then each of the LLCs have a separate property policy with liability in place because the lender required it. And that's the next piece I want to get into, because there's sometimes what you want to do and the price you want to pay, and what I would like to do in the portfolio that I design all sounds great, but it all comes down to access to capital. So at times we're making the best path forward, and then your lender will come back about 2 weeks before closing, or in one case, the other case while I was on vacation, 10 minutes before closing, and said, we need this, this, and this. So best laid plans. So what I always suggest is if you're working with a lender, to get them connected to your insurance agent before you go down, no pun intended, the rabbit hole of writing all of these policies, especially on that. Now, in that case, we got lucky. They were good. We're good to go. But I've worked with other entities that I would say are more hard money lenders, and they're still trying to figure out what insurance specifics they want their clients to have. Or if you work with Fund That Flip, I was just telling Alex, they tell you step by step exactly what they're looking for, and it makes your decision easier and it makes my job easier, because the main thing is that if you want the capital to buy the house, the insurance has got to be legit and right. And we definitely don't want to get into a standpoint where you're 48 hours out from closing, you're waiting on the disclosures to come through, and the one thing that they're not happy with is insurance. So making sure that you have access to that person, they have a sense of urgency, they can get the changes made quickly, because if the insurance isn't right, you're not closing and getting the money. And I haven't witnessed it a lot, but I have heard a lot of horror stories. So, trying to think all the high level things. How about open up to questions? Let's see what somebody has. Yes.
All of our properties have, of course, insurance on them, but I wasn't satisfied, and I wanted umbrella policies for excess liability.
Yes.
But I asked my insurance broker how much you want. I was like, well, what the hell? You got to
Right.
give me some guidance and everything. Do you have any guidance in that situation about how much is too much or how much is enough?
Yes. So with umbrella policies, if you own properties in your name, you would get what's called a personal umbrella. If you own properties in an LLC or an S Corp, that becomes a commercial umbrella. They work the same. It's just they usually charge more for a commercial umbrella than they do an individual because there's more exposure. So a good rule of thumb is, it kind of depends on the person's situation, but it's really looking at your total net worth and looking at the net worth you're willing to give somebody in the event you're sued. Now, most people say, I don't want to give anybody anything. Well, then that's what we put the umbrella in place to protect: the equity that you have and the net worth you have. So if your net worth is $1 million, we consider, some companies will do $1, $5, and $10 million umbrellas. Let me back up. What that means is any policy that's listed in that umbrella, let's say that individual policy has $500,000 in liability. Something tragic happens, and the total bill that somebody has to pay to the person that was injured is $750. If you don't have an umbrella, the insurance company pays $500, $250 has to come from somewhere else. Usually that's through liquid investments, and then you also then dip into property equity, detachments, and all of that. It gets super messy. So if you have an umbrella in place, though, and the bill's $750,000, homeowner's policy pays out first, or that underlying policy pays out first. The umbrella kicks in to cover the difference, and that way none of your personal assets are attached. So in an individual standpoint, that's pretty easy. We can look at net worth. Even from a portfolio aspect, we can look at that too. But that's really where getting with your attorney to make sure, if you are planning on doing multiple investments, understanding your exposure from an individual, as an LLC, and an S Corp. Because yes, there's protections of putting it into the LLC, but we're actually seeing cases now where if the owner of that LLC is found to be negligent, they can actually come back and attach to your personal assets. We're seeing from an S Corp perspective that if an employee of your S Corp is found negligent, they're actually attacking the S Corp, and then they're going to attack that individual person that was found negligent, right? So it's kind of like medical malpractice insurance. A lot of people understand how that works, and that's why some nurses carry it privately, even though their business has it too. So when we look at your entire portfolio, we just look at, here's the assets, here's the liability. Hopefully you have a profit. That's your exposure. But then if it gets really bad, what is your personal exposure to? So it's hard to just say, and now if you've been working with that person for a while, they should be able to say, we wouldn't suggest any more than 1 million, 5 million, or 10 million. And there's companies out there, like there's a company called Personal Umbrella that will, as long as you have a B+ higher rating, or your insurer has a B+ higher rating, you can actually consolidate a lot into one umbrella that's more affordable. So it will cover you on the LLC side, and it will cover you on the personal side too. It's a little bit more complicated, but it's actually about the same money if you bought 2 policies. So it's about simplification. But yeah, that's a great question, because umbrellas are super important, in my opinion. If you are doing any kind of investing, working with the public in any way, and your income and profitability depend on it, an umbrella policy is definitely something I recommend.
Well, you raised something that I also wanted to ask you about. I saw this webinar from this insurance broker in New Jersey, and he said what you should do is look at your personal stuff and your business stuff, and not just one here, one silo, one in the other, but look at it holistically. And I was really attracted to that concept. But he says that you're in Maryland. Forget it. I don't want to work with you. So he never wanted to continue the discussion. But is that something that you do?
Yeah. So anytime that we're looking at any kind of policies personally or company-wide, I like to know the full story. The reason why I say that is I just had a referral the other day, and these clients, they have a short-term rental in Colorado. They have a short-term rental in New Jersey. These are all properties they've bought throughout their lives, and they just haven't sold. They've just turned them into rentals. And they're getting ready to retire, so they just bought in the estuary up in Delaware. I can't remember the little part of the estuary, but it's a little development. And so she sent me all of her policies, and we're looking at it, and it was interesting because the agent that she has is rating them all as primary residences. And so when you rate things as a primary residence, there's duplication of coverage, and frankly, you're only getting paid once. So her insurance costs went from about $5,000 a year down to $3,000 because we wrote the policies correctly. It's the same concept when it comes to investment properties, businesses. It's really important to look at everything and then pick the pieces out that we can maybe change. You know, sometimes you hold, you stay where you are. Sometimes you stay, make a change. And then other times you really are at the point where you need to move forward. And we do business insurance as well. And I'm meeting with one of my business clients tomorrow. She just got a new contract. Like, we have to completely change her insurance because the company she was with, she's outgrown. And that happens the same way in real estate. Like, there is a point where you can outgrow the insurance company you're with based on your situation.
How would you know that you've outgrown?
You have an agent that keeps track of the properties that you buy. And you probably, like, if you're investing in properties, you're definitely a different kind of client than maybe somebody that has a condo and 2 cars that they use every day, right? So it's just making sure that you're partnered up with an agent you can ask questions to. A lot of people in this group have actually come to me and asked me questions, and I've actually told them, your policy is awesome, stay exactly where you are, but when it goes up, you call me back. We can do something. So that's just one of the commitments that I made to Mickey when she invited me to this group, and to Alex, is that, like, yes, I sell insurance, but there's times where I would never suggest changing a policy that's great and affordable and ask you to pay me more money just because I'm me. Like, that doesn't make any sense. I wouldn't even do that for myself. So, but yeah, that's whenever your agent should really be like, okay, I think we need to look at a different policy here for you. and figure that out. Yeah, I think that one of the things is that there's a couple different types of agencies out there. There's one agency that's called a captive agency. Those are going to be agents that can only insure through one company. And when you're an investor or you're building your portfolio, they might be able to help you sometimes, but they may not be able to help you every time. So then there's a different aspect that's more of a brokerage. So these are agents that have access to a lot of different companies for a lot of different situations. You may still have to, like I refer to an agent up in Delaware whenever it comes to some different manufactured home situations, because those are tricky situations as we call them, and they have the best product and price, but she sends me referrals too for things she can't do. So like a lot of agents that are brokers, we create relationships with other local agents to try to find the solution. We don't win every day, but if we can at least try to help you understand what you have, maybe it's good. There is such a thing as being overinsured. I see it a lot where we'll review a property and I get like, some people like the number on the paper to be bigger than what their property is actually worth. So some of it's driven by somebody saying, I don't agree that my property is only worth $265,000. If I had to rebuild this or rebuy something, I would need $465,000. Okay. But the problem is whatever numbers on that paper really doesn't make any difference, because when they come out to do your claim, they're only going to pay you for what they see. So I see that sometimes that other companies aren't doing the due diligence to do a calculator to help you assess the right value. So you're paying for an inflated number that you're never going to ever get any return on. From a liability perspective, I'm in insurance. So my husband would tell you, we're completely overinsured when it comes to liability, but it's because I live in this world and I see the worst that happens, right? But I feel like you just have to really sit down and have a conversation about the umbrella values, about what you put on each policy. But on landlord policies, the base liability that I recommend getting is anywhere from $300 to $500, because depending on those levels, those will qualify you for an umbrella, because an umbrella you usually have to have $300,000 to $500,000 in liability anyways. So yeah, can you be overinsured? Yes. Can you be underinsured? Yes. You just have to like make sure you partner with an advisor that can go through the evaluation and be like, this is good, this is too much, this is too little. So